Welcome to this earnings report video here at xm.com. I'm Christina Marujos, and joining me today is lead investment analyst Rafi Boyadjian. Now, Rafi, it's been somewhat of a mixed start to the Q4 earnings season, and we've had quite a bit of volatility on Wall Street lately. Have the earnings results really been so bad, or were expectations set too high?
Well, Christina, this earnings season isn't quite going just as strongly as, say, the previous earnings season we had. Even during the pandemic, we did see many companies beating their estimates. And although overall most companies are beating their estimates, the share of companies doing so, however, is down compared to the prior quarter. And things did get off to a bit of a rocky start because the major bank earnings did disappoint. It was a mixed set of earnings from the major banks at the start of the season. On the whole, though, it's not quite as grim as a lot of share prices would suggest. It's just that even the companies that are beating, they're not beating their estimates quite as much as they had in the prior quarter. So about 75% of companies have beat their estimates. That's down to about 88% we saw in the prior quarter. And this is to be expected in a way because a lot of the hits that companies are getting on their revenue is down to these ongoing supply problems. And in the US specifically, we are seeing a lot of wage pressures as well. And on top of all that, we've got the prospect of higher borrowing costs because the Fed is almost certain to start raising interest rates in March. So all in all, although it's not too bad, there's even more focus than usual on the forecast for the current and the upcoming quarters so that investors can get a sense of where things are headed.
And we've just got Microsoft's earnings overnight, and the stock is up in pre-market trade. What can you tell us about those results?
Well, we saw a bit of a mixed response by the markets to the Microsoft earnings because initially the share price actually fell quite a bit in after hours trading, but it is now up significantly. So overall, Microsoft earnings were pretty solid. They did report revenue of more than $50 billion for the fourth quarter, which is their second fiscal quarter. So that was the first time that their quarterly revenue exceeded 50 billion. But some investors were disappointed that the cloud division didn't see even stronger growth than the one that they reported. But afterwards, in the earnings call, the company did say that they do expect cloud division to see even faster rate of growth for the current quarter. And that really cheered investors because they were kind of fearing the worst. So that's why the stock is up in pre-market trade. On the whole, though, if you look at the share price for the year so far, it is down 14%. That's down to the overall broader sell-off we're seeing in tech stocks. And I guess we'll have to wait and see when Wall Street opens trading later today, whether or not the share price will really bounce back.
And speaking of Wall Street today, Tesla is reporting its results after today's closing bell on Wall Street, but we also got Apple coming up tomorrow. What should we look out for in those earnings?
Well, we already had some positive reports coming out of Tesla because they already did reveal how many vehicles they delivered in 2021. In the fourth quarter, they delivered 71% more vehicles over the year. And for the year as a whole in 2021, it was up 87%. So that's a pretty impressive number considering that, much of the automotive industry has been really badly affected by the supply disruptions. So when it comes to Tesla, analysts are expecting revenue of just under 17 billion for the final quarter of 2021 and earnings per share of $2.33. That would be a big jump from the same quarter a year ago. So very impressive on the whole, even though the stock price is down about 13% in the year to date. Now moving on to Apple, analysts are expecting revenue of 119 billion, and that would be significantly slow yearly growth rate compared to what we've been seeing in the more recent quarters. Earnings per share is expected at $1.90. So maybe there's some signs of slowdown there. So it's going to be important in terms of what product Apple has planned for 2022. Of course, we're going to get the new iPhone, and the company is also investing heavily in augmented reality and virtual reality. And overall, Apple's price earnings ratio isn't too bad. It's 26.8 at the moment. That's 12 months multiple price earnings ratio. And that's pretty low compared to other tech companies such as Tesla, who's extremely overvalued. Even now, after that sell-off, Tesla's 12 months multiple is 91, which is well above the industry average. So apart from the earnings, investors really will be looking to see what these companies will be saying about the upcoming quarters. The guidance will be very important because we still have those supply chain bottlenecks and tighter monetary policy coming up. So we're likely to see quite a bit of volatility, but there is a good chance that we could see a rebound in both those company stocks should they beat their estimates, or at least give us some encouraging guidance.
Rafi, it was great having you with me today. And thank you for watching this earnings report here at xm.com.